Hey guys, welcome back. Johnny here. If this is your first time watching, I show you how to make money in the stock market. So if you like that kind of stuff, feel free to subscribe to my channel and click the little bell so you don't miss anything. Alright, so I got another strong buy for you, and as the title says, you all know it, we all know it as Apple, or ticker symbol AAPL. Now, I honestly don't even really have to do a video about this because there's so many people that probably have already done a video about why Apple is a strong buy, but I like to get different people's perspectives and thought there wasn't enough perspectives out there specifically on Apple, so I thought I'd give my own basically perspective on it. So Apple is a huge tech company. If you don't have one yet, an Apple iPhone, you need to get one. There's probably a link in the description below on equipment I use because I have an iPhone. I love it. I use it every day. All my family uses it. I think all my friends use them. And then you have Samsung, which is also a good company. I mean, honestly, I don't know what I do without my phone. That's how I use the Robinhood app and get in contact with anyone and everyone that I basically love or care about. So they also have Apple Watches and Apple computers, and just there's so many Apple products out there. I could go on forever and describe them all, but everyone knows Apple. So right off the bat, at $217.53 per share, it is a little bit costly in my opinion because I do have such a small account, but it isn't costly for as an investment risk. It is significantly increasing over time. It's not going anywhere. It's up $4 or 2% in one day, and that's like average all the time. They have 160,000 people on the Robinhood app that own it. 62% of analysts say to buy this company. Just some recaps for all of you that don't know Apple. It's a computer hardware, computer software, consumer products company. Apple Inc. engages in the design, manufacturing, and marketing of mobile communications, media devices, personal computers, portable digital music players. It operates through the following geographical segments: Americas, Europe, Greater China, Japan, and the rest of Asia Pacific. It's everywhere. The CEO right now is Tim Cook. They employ 123,000 employees. Huge company. They've been around since 1976 in Cupertino, California. Woohoo for everyone that lives in California. Market cap right now, as you can see, it says 1,000 billion. That's not a glitch. What's 1,000 billion, guys? $1 trillion company market cap. This is one of the largest stock companies in the world. It's huge. Apple, good job, high five, applaud, everything for you. Congratulations. Price earnings ratio right now is super low. I love it at 19.73. Dividend yield at 1.56%. So they do pay a nice steady dividend for many years now. Average volume is at 30 million, guys. I'm not sure I've ever done a video with such a high average volume before. 30 million is substantial. That is a lot. So this means there's a lot of people watching this company. There's a lot of trades frequently in and out, constantly growing. Their average price paid was at 161, 52-week low, way back at $149, with a 52-week high right now at $217.95. That's going to keep rising and rising. 35% higher right now, but guys, if you don't get involved with this company today, you're going to miss out on an opportunity tomorrow. And I'll get into that in just a second. Now, analyst rating, 62% of 39 rating. That means 39 ratings. 39 analysts have rated this, and that is also high for Robinhood. Usually you see 9, 10, 16, but 39 people have rated this analyst, and 62% are saying it's a buy, 36% are saying it's a hold, and literally only 3% are saying to sell, and they're probably saying to sell for profits, not even for the fact that it's going to stop growing. Now, earnings per share, as you can see, they're pretty much right on the money with every earnings quarter they have. Slightly higher though, slight dips here and there, but they're holding strong right now at $2.34 per share. That is actually really, really good. That means money's coming in and they're making profits per share. Now, the street rating is also giving this a A- buy. Now, this is a strong buy to the street. This is a strong buy to me. And if this hasn't already encouraged you to go out and buy Apple already, then I will still go over some more information with you for everyone that likes what I do here. So, as you can tell, the annual dividend yield is still at 1.39%. That means they're paying out right now close to $3 per year, and that is quarterly. They have a $1 trillion market cap, which is just unbelievable. They have just so much money, it's ridiculous. But what I like is their target price right here. Target price, $272 is their target price. Right now, guys, we were just talking, and their target price is at $217. They have so much more way to go to get to that target price, and they're going to get to that quick, super quick. You're going to blink and they're going to be at 271, talking about going to 350. This is a great company to get involved with. They've had a buy rating for a long time. Since 2011 they've had a buy rating, so this company has not slowed down at all. Some of the highlights for it is its reasonable debt levels are most measurable, notable returns on equity. They have solid stock price performance, and impressive record of earnings per share growth, which significantly outweighs their weakness of a detract from the generally positive outlook. Now, their revenues have increased by 16%, which has helped boost the earnings per share. They have a low debt-to-equity ratio of 1.00, quick ratio of 1.10, so they can illustrate the ability to avoid short-term cash problems. They also have a strong earnings growth of 40% compared to last year. And it says this stock has surged by 30% over the past year, improved earnings per share by 40%, and they're expected to improve that earnings to $11.47 versus the $9.20. Now, the industry analysis, obviously, some of the majority leaders would be Apple, as well as some other Japanese companies, Logitech, Canon Inc., HP Inc., Seagate Technology, Western Digital, NeTap, Xerox, and 3D Systems, Pure Storage, stuff like that. They have an incredible net income of $56 billion, a net sales of $255 billion, PE ratio super low at barely a 19, and guys, their market cap is at $1 trillion. Now, if that hasn't already encouraged you to go out and buy it right away, their growth is at a 4 out of 5 stars, total return 5 out of 5, efficiency 5 out of 5, price volatility 4 out of 5, solvency 4.5 out of 5, and income 3.5 out of 5. That's a great numbers there. It is a strong buy in my opinion. Stockholders' equity has also increased by 13%, so there are more and more people investing in this company through adding more money or even through DRIP programs So good company to get involved with. I don't see any reason why this company would stop growing anytime soon. It's just crazy. It's just increasing so much. This is definitely a strong buy in my book. So if you guys like this video, please smash the like button, subscribe to my channel so that I know that you liked it, and let me know if you want me to do any more videos. And you guys have a great night.